This is our Forex blog for July 25th, 2013, and I'd like to show you one of the easiest ways of trading, and that is to use our currency indexes to see which currencies are strong and which ones are weak. This is the Euro index, this is the Pound index, and we have made them, turned them from scripts into actual symbols. So they'll come in faster, they will load much faster, they use up about 95% or more or less memory. And basically, in a nutshell, how you want to do this is you want to see which currencies are going up, which ones are going down, and basically buy the strong ones versus the weak and sell the weak versus the strong. It's that simple. You can see earlier today the pound was going sideways, broke out here at 2 o'clock. The dollar was going down at that time, and so basically before 4:30 or 5, when the pound flipped, you want to be basically buying the pound dollar. So let's go take a look. Earlier in the day, basically are looking to buy sideways breakouts of rectangle patterns, or a lot of times when you have a trend, you get a little bit of a pullback, and then you buy or sell it. If it's trending up, you buy the pullback, you draw a trend line over the bar's highs. When it breaks, you get in. It's that simple. We're still working on these currency indexes and hope to release them soon. But this really lets you see what the trend is. And you can use fibs, fib targets, trend lines, and all these things on the actual indexes. For instance, the euro was trending down. You want to look to sell it at the 50 and 62% retracement. That was at 6:30. At 6:30, the dollar was actually trending up. So you could basically look for, at 6:30, a euro dollar sell. Actually, at 6:30, the dollar's kind of going sideways. You want to find one that's actually trending up. At 6:30, this one was trending up, and it had just pulled back. So the euro yen makes an excellent one to be selling here at 6:30. As you can see, there is a perfect pullback on here. You go short, put your stop right above the high, and this one shot down a significant amount, fell 10, 20, 30, or 40 pips. And today's blog is going to be short because I have to leave and run an errand, but let me just show you one other thing I've been working on. And these are our signals, which I personally use in my automated systems, and so therefore the need for accuracy is critical. And I'll just put in 1 here so it just shows the buy and sell signals. If I leave that at 0, it will tell me which. There's 32 different trade patterns that are in this. Some of the trade patterns don't trigger more than 2 or 3 times a week. But you can see, even if you're a brand new trader, most of these trades work. This one went down, this one went up, this one here failed, this one here failed, this one might have been a break even or a failure, this one worked, this one worked, this one maybe a failure, this one went up a little bit, you could have got out near break even, this one worked, this one worked, this one worked, this one worked well, this one here obviously failed, and this one failed. But the majority of the signals on here, as you can see, generated at least 10 or 15 pips, or at least went up a little bit, allowing you to get out with a 5 or 10 pip profit, or at least 5 pips. So that's come along pretty well. I hope to release that in the upcoming weeks, no longer than 2 months at the maximum. But for brand new traders, the combination between the currency index to identify which currencies are trending up, which ones are strongest to buy versus the weak one, and then actually looking at the chart and waiting for a signal in those strong or weak pairs is going to allow you to find some really good trades like this one right here, which, by the way, is one of my favorite trades. The market went right to the most actively traded price for the previous day, and then it reversed, which it frequently does. You can see this is the point of control of the previous days using value areas, went right up to that level and reversed. And most of my patterns look for 2 to 5 bar reversals. In this case, So that's it for today's, relatively quick blog. And, I'm going to try to do one every day. Even some days it takes me 5, 6, 7 hours to get rid of a lot of the unnecessary bad signals. It's very hard to do while also allowing all the good ones to come through. There's a slew of tools that we use in the software to find these trades, find the patterns, only buy when the market's not that weak, only sell when it's very likely to go down. But again, you can see I've done a pretty good job of, this one here failed, this one worked, this one worked, this one worked, this one worked, failure. I did find the low down there too, I believe. Let's showcase that. As you can see, I also, found the low down here, and that one went up about 20 or 30 pips. If you're in a trade and you see one of these sell signals, you might want to tighten your stop. And if you get out of your long with a small or a big win and you flip and go short, typically you're not going to get more than 2 signals in a row that fail. If you get a sell signal here and it fails, the second one is much more likely to be the reversal area. So keep that in mind. If you do get in a trade and you lose, you get in the second time, typically you're going to make 10 or 15 pips. That's the way I've designed this, because I use this for my own automated trading system, and I actually start trading more aggressively with more lots if I do have one and especially 2 losers in a row, which is very rare. Again, there's 32 different patterns that show up in this, and if I put a 0 here, it actually shows which one of the trade signals generated each trade. As you can see, trade signal 32, this one has a trade signal 1 and a 31. Number 29 hit here, 17 and 23. So this is what I use when I am decoding these. If I see too many losses with a new signal that I put in there, let's say number 30, if I see a bunch of losses with a 30, and then I go in and I try to put additional rules in there and get rid of the losing trades without getting rid of the good ones. So that's what I do pretty much for 5 or more hours every day, and have been doing it for close to a year now, and it's starting to get pretty good. Identifying the swings is key. A downtrend is a series of lower lows, lower highs. Uptrend is a series of higher highs, higher lows. When you have an uptrend, you basically want to be buying the dips, and that's how I've pretty much traded for the last 12, 13 years.